Good morning, everyone. This is Anne Marie. A quick look at SPY. It's been so long since I've done one of these. Many of you know that I have relocated to the Midwest, and that's taken quite a bit of time and energy, though relatively enjoyable in the long run. All right, so let's take a look at SPY. We are looking at exactly the same formation that we've been looking at since early May. It is very much sitting in this butterfly at the expansion zone. Now, here's something very interesting. As many of you know that listen to me, I use something called the 50% rule. No, I don't need that. And that 50% rule says that if I can hold through a region, it is much more likely that I breach into the next level rather than come back to the baseline. Here's the very interesting thing, folks. We've been settling around right here 1, 2, 3, 4, 5, 6 weeks around this region. You can see two patterns, an A, B, C, D inside of this gigantic butterfly. Both patterns bearish. Remember, bearish patterns in bullish charts just mean pullbacks into support. They do not mean reversal action. And so that's pretty important for us to look at. Notice the shading event there. It shows the chart coming into 205.90. And then, of course, with this one, we're looking at 213.40. Now, are there things showing up in the chart that tell us that we might be setting up for some rollover formation? Not really. MACD high, it's moving up here. Notice the last time it was up in this region. Some technical divergence, but that's not really anything that we can look at. We had a little pullback into support right there, and it stayed up there. Listen, if you are looking at a MACD and all your lines are above zero, it means you've got bullish formations and you don't need to think about them rolling over. And you know, frankly, we see a lot of folks piling right back in to the chart as soon as it comes down. You know, there are a lot of reasons potentially that we could say, you know, the market needs to roll over, but consistently active, pushing further and further, and right now in a very solid, tight trading range above 198.60. I think we'll see ourselves trying to stretch up into the weekly resistance area near that, we have it, maybe 199.20 to 200. We'll be expanding there. Right now, we are sitting right on the edge of this formation right here. I'm going to expand it out just a little bit. Look at how many days we've been sitting in this region. We'll show it to you right there. Daily charts showing lots of sideways action. Listen, I was talking with someone the other day, and they said, you know, I make my setups, and things happen, and I get stopped out of the trade. And I have a lot of setups that I use, and I'm getting into a lot of charts, sometimes 15 setups, maybe more. And if I get in, a couple of them will work, and then, you know, things go awry. And if that is you, you're finding a lot of setups, you're getting in there, things are going awry, you feel like, you know, the market's just whatever. I do want to share with you that a good way to stop that from happening is to become a little bit more discerning about where it is that you're going to put your money and stay out of areas that are congested. Listen, if you're looking at a congested region, you want to trade on the edges, and that doesn't matter if you're looking at a 1-week chart, a 1-day chart, a 4-hour chart, or a 5-minute chart. Wait until it gets out of the noisy areas, or trade on the edges of the noisy areas back into the noise. And I know that that's difficult for us to do, because we don't want to see a candlestick come down like this and then go, oh, I should be buying. Our brain doesn't really make that leap. But if we just realize that as long as our MACDs stay above zero and as long as we keep running in trending territory with our momentum indicators, that these pullbacks are going to be into support and they are tradable that way. All right, let's go all the way down to the 1 hour chart and we'll see what's going to happen today, and then I'll get this out to YouTube because I've had folks go, how come you're not doing any more YouTubes? You know, it's really, it's difficult to get all of that together in the early morning and then still keep up with charts and earnings and projections and all the things that I normally do. So if you're looking at the red-green events here, these are RSI bars, charts by MotiveWave. They still are the most incredible charting platform out there. They really are phenomenal. We've got this gapping event from the beginning of the week, and it's holding in a little bit of a rotation. Notice this wave is also a harmonic. We could have a little bit of a press up. Again, 98.60 to 98.68, and of course I mean 198.68, 198.60. That's going to be that line in the sand. You breach it there, it's going to be long activity. Notice the slopes of everything, folks. We have got long activity. Can it pull back? Absolutely, but watch it hold support. We have to assume the market is going to continue in the general direction that it's been going in, which is a grinding movement to the north. All right, so today we're going to look for charts are popping just a little bit. I just talked to IGTV across the pond. FTSE's up today, and so we are just looking at a space where we should hold support if we pull back a little bit. If we lose 197.85 today, we're going to work on filling the gap. And again, that's 197.49. We should bounce from there, folks, but a really messy, really messy space. You just have to trade level to level and learn to pay attention. The last thing I want to say is, I hear this a lot. Folks that get into those choppy spaces, they say, you know, I just need to day trade, and then that way I'll get up and I'll be able to manage and control what's happening a lot better. I do want to share with you the following notice. Swing traders, in general, do not need as much skill as day traders do. And many of us go from swing trading to day trading because we feel we can take more control over what's happening in our accounts when we get there with even less skill than the day trader needs. And so if you are that person and you go, gosh, you know, I think if I day trade I could make more money, you have to realize that the day trader exposes themselves to many more opportunities for loss because there are so many more trades. And if your skill level is lacking from a swing perspective and you go to the day trading event, you're going to have a very difficult time. You need to have those skills really in place. All right? Now, of course, visit thetradingbook.com. Thanks for being here today. Thanks for watching the video, and I will see you all soon.